Welcome to TradeTheMBI.com. This is John. This report is for the 6th of February. Modest day yesterday. We fought in between, still caught between the 100% range here on the Morganacci lines and that APM yellow, which would still be the draw in weakness. And in this particular case, we still have magenta over yellow, though slightly fading close to that 33 level, but still over it. We do see a little bit of an increase in short activity, but we got that DOC crossover of green midterm buyers over cyan, and cyan now has dipped below red. So we're in that continuation of always the buy. And, again, this is that consideration back and forth between um, rates, Powell not budging, the economy sort of in a meh, and that just keeps things pretty much chugging along. I mean, they're going to do everything they can to print the best numbers they can. At least we saw that from the labor numbers and that, though, when you look deep into the reports, there are troubling signs, but you can fudge the numbers for quite a few months before you eventually have to make an adjustment. And this is what typically we've seen over the last couple of years. The pattern is you print these rosy numbers and then you go back and revise them after the news, so it sort of becomes irrelevant. And then the new print looks good, and you just keep recycling that. From an NQ standpoint, much better. It recovered all of that and actually is pushing a little bit towards the peak, and that's been the case. The Nasdaq has been the leader throughout most of this rally, and I think you can look to the Magnificent Seven for most of that behavior. It looks like some people in the bond market woke up a little bit, realized they were way off base. Rates moving back up and getting a little softening there, but still outside where the Fed target is. And the expectation, as you get closer to March, you move further and further away from what their original expectations of rate cuts starting at the beginning of March have now dissipated to zero. The next question will, be by midsummer. That even becomes suspect. A lot of it depends, like we've always been talking about, what happens with oil. And if it stays in a moderate tone, then you don't have an acceleration inflation. It means you haven't abated the inflation, already very elevated from an oil standpoint. What you don't get, unless you can get down below 50, is that improvement where you actually have a deceleration and actual, return to a negative inflation, which would at least modify things to the point I don't think you're ever going to get back. I mean, that's always been the case. Once prices go up, they're never returning to it. So that devaluation is built in, and it's always going to be there. And that's the nature of a Federal Reserve System. It always creates inflation until it reaches a point of no return, and then it breaks and have to start over. It's been quite an experiment over the length of time we've been doing it, over a century. And when we look at it from a Eurozone standpoint, again, we've talked about the disaster that is the Eurozone. It's been amazing that they've been able to hold it up as long as they have, but very close to filling this positive extreme going back here, and that would satisfy all of those. And what they do is they just buy a few months and return back and rinse and repeat, and they can just keep doing that. That's all you got to do is just keep recycling that energy back and forth. A little bit of loss, and the hope is that you keep it above a confidence catastrophic breakdown point. You can see that developing in China now. Everything they're doing right now is trying to change the confidence in people to support things and hope that that buys more time. Surprisingly, no interest in gold whatsoever, and that's just the muted inflationary aspect of things. No giant acceleration, and world conflict, while still there, within manageable expectations. And you get that, we talked about this, the weakness built in with that MBI white move on Bitcoin and that, and it's held up quite well. So that's going to be explosive to the upside when any kind of negative draw is removed. So I think that's going to be an interesting one. We saw some fantastic predictions for price of ETH up to 7,000 and things like that as adoption. And this gets into that other issue. They all think that the sudden adoption of ETFs is going to alter the world. It's like if you really wanted to get into these things now, you could get into them in the futures. And so the only thing you're doing is you would allow retail, and that becomes a great opportunity because then you can really whipsaw them around, which is what the markets do. That's why they want these. Gives them all sorts of flexibility to do these kinds of things. And, like we've talked about with the Bitcoin futures, then you can avoid the scrutiny of, owning crypto and still be in it without, that added regulatory issue. From a 50K standpoint, nice little move back down to 50%. Supported perfectly, turn around the magenta, and then a little bit of a pop back, though lower high. And you can see that shakeout having suffered the deep move there, returned much lower shakeout relative to the highs, not as bad as it would look. So a support build here could create your next leg, your effective ABC kind of move. It's a little weaker than you would expect. When we look at it from a 5-minute standpoint, you can see post market right there. We're looking at some negativity, but we saw some interesting breakdowns, particularly early in the morning. We ended up with this nice dramatic sell that just violently turned around and created a secondary spike. So the expectation would be that you get a return back to that 49.52-ish range here. Didn't quite happen at the end of the day. A little bit of softness took out, well, it was only a minor positive extreme, like midpoint through, which got filled by the end of the day. The classic post market. But the dip in the post market took us to 57, a little bit higher than that 52 range. We're at 60 right now. It's possible that we fill that back in a sophomore. And I think, this gets back to my whole point about, everyone always looks for time in some of these assessments, and that's not how the algorithms work. They're really less concerned with the time than they are with the actual targets. And this is something we've talked about for quite a number of years because that's how the market functions. It is meant to inflict a psychological pain for those who are positioned incorrectly, but at the end of the day, it still follows what it tells you it's going to do. It's just a matter of being disciplined enough to wait for it and play in between the ranges that are outside of what those targets are. We see that all the time. So pretty straightforward stuff. I think that the market is adding to that volatility that we were looking for, and I think that it's only going to escalate here as we get a little bit further into the month and more and more data accumulates to indicate whether or not the economy is actually starting to expand or just holding on. I think that the longer we have that mid-range oil, the better chance you have of the absorption of all of that. And we're in that peak period now where all the rates have really bitten to the point where we now have a real clear idea going forward how much breaking action they're having, if any. And if they're able to be absorbed within there, it doesn't bode well for the idea of a rate cut because then you would hyper accelerate things. Now, this gets into election questions. Do you try and accelerate that to make things look good, for the later part of the year for a nice print? Definitely a possibility, and certainly we'll have to weigh those decisions as they come because an arbitrary rate cut somewhere in between without a justification for why you're doing it would definitely be an interesting one because historically you're really back into a normal range of what rates are. I know a lot of people aren't old enough to even remember what those years were like, but this was more the norm than not, despite a decade and a half of bizarre fiscal behavior. This is actually a return to what things were like way back. So a little bit of history there. As always, though, trade well. Anything relevant, I will put it on the Skype chat. Have a good one.